Top 3 stocks I'm buying right now. Why I'm buying them, where I'm buying them, and what I think the current valuations of these companies are. Now, you're going to want to stick around to the end of this video because in the front of the video, I'm going to talk about a company that's partnered with Palantir. But at the end of the video, I'm going to give you a free extra stock that I'm buying. So not 3, but 4 stocks that I'm buying right now. And that fourth company, which is a speculative company, high risk, high reward, is also partnered with Palantir, guys. So welcome in, everybody. Hope you guys are having an amazing day. Go ahead and do me a favor, hit that like button, hit the subscribe button so we can get that out of the way. And let's jump right into it. Let's jump on over to valuesnapshot.io, the site that I use for all my investing research. We're going to jump on over here into stock number 1. Well, this comes as no surprise. I didn't put it at the end of the video this time. I put it at the front of the video, Zeta Global. Why am I buying Zeta Global? Well, I believe they're massively undervalued at their current price of $22.41. And that's just as a marketing tech company. Now, they're not just a marketing tech company anymore. They partner with Snowflake. They partner with OpenAI to go after generative engine optimization. And then they recently just signed a 7-year contract partnership with Palantir to build on top of Foundry. And what they're doing with this partnership is they're spinning from just a marketing tech company into a business intelligence company. And now they're partnered up with Palantir, where Palantir's enterprise clients, was about over 900, can be now cross-sold into Zeta, and Zeta's customers can now be cross-sold into Palantir. Massive partnership, and I think this partnership between Zeta and Palantir is going to change the entire software landscape. We'll get into that in a minute for stock number 2 that I'm buying, but I wanted to lead off with that, right? So Zeta, as I believe, is just a marketing tech company, is severely undervalued. Even at $22.41, we're up about 13% in the last month, basically break even over the last 6 months, and year to date, only up about 12.5%. Now, if we scroll down and get a quick snapshot of the company, we're seeing that analysts believe from current price, we are fair value is about $26.67, and then high end of analysts is about $30.67, giving us about 19% upside from here. But the thing about analysts is that they think this company is a basically high 20s to low 30s valuation over the next 12 months. I think it's way, way higher right now. And so if we look at the company, they grew 50% revenue growth last quarter. And then on a trailing 12-month, they've grown almost 30%. Gross margins of 62%, free cash flow margins of 14%. Their balance sheet is a fortress. Their price to sales on a trailing 12-month is only 3.9 times. And I believe that should be at a minimum 6 times price to sales for how much they're growing in the business that they're doing right now. Not the business that they're going to be doing as they take on some of these Palantir enterprise clients as well. So 3.9, they should be sitting around 6 as a floor, and that puts them at about a $40 company, about a almost $10 billion market cap, and they're currently sitting at $5.6 billion market cap. Look at other fundamentals and financials, almost $200 million on a trailing 12-month on free cash flow. Current ratio of 2. Their forward PE is about 20, or their 2-year forward PE is about 20. Free cash flow yield is very, very nice at 3.57. Revenue continues to grow, 28.8% compounding annual growth rate over the last 6 years. Very nice. Their margin expansion is growing like crazy, and they're flipping to net income positive and GAAP EPS positive this year, in my opinion. So whenever we run over into the charts, we can also see just how things are moving. Net income is up and to the right. EPS is up and to the right, going from negative, obviously about to flip to positive. And their free cash flow, the lifeblood of a business, is just exploding. Their revenue is just exploding. Their gross margins, operating margins, net margins, free cash flow margins, all up and to the right. EBITDA has gone from negative to positive. Operating income, same thing. Operating cash flow, gross profits. Every way you look at this company, it is at its inflection point and continuing to grow and move higher and higher and higher. The valuation, when we simply take out EPS because they're not GAAP EPS positive yet, and we throw in here that they are doing about 3 to 4% of revenue, profit margins at about, they're doing currently, probably for this year, going to be doing about 38% revenue growth for this year. That gives them a rule of 40, about 42. I think they said that it's about 48, so I might be off somewhere there. And their PEG ratio is 0.80. And based on their discounted cash flow model, based on a 5-year projections target growth rate of 25% for the next 5 years, with a 14% free cash flow margin, a 28 terminal is about $48. The stock price that's the fair value, $48. Now, if we bump this down to say 25, bump up the free cash flow margin as it should be, and then say drop it to a 20, you're still looking at about a $39 stock, 74% higher than where we are right now. So where am I buying? Well, I'm still buying right now because I believe since this high up here at $38.20, we are currently at $22.41. The business has gone it probably has gotten 5 to 10 times better. That is just ugly, guys. Sorry. The business has gotten 5 to 10 times better since it was at $38.20 back in 2024. It's gotten to 5 to 10 times better, and we're currently at $22. And again, if we get a fair price to sales ratio of 6 times, then we will be sitting up here around $40. And I believe that's fair value today, not tomorrow, not yesterday, not next month, not next year, today. So I believe it's a $40 stock today, around a $10 billion market cap company today, and I could see them growing into a $50 billion market cap company over the next 5 to 10 years, and a $25 billion market cap company in the next 2 to 3 years. So the upside is obviously massive on this company, Zeta, the company I've been talking about forever, company I've been covering for well over a year now. Just go to my YouTube, go down to the bio below. There will be tons and tons of videos you can watch, my full thesis, my price targets, everything Zeta. I continue to talk about it consistently. So right now, even though it's just a 1 times on the DCA optimizer, which just tells me how much I should be dollar cost averaging per month into the stock. So if it's 1 times, I'm doing 1 times my ad. So if each month I'm saying I'm going to put $250 into Zeta, then I'm just going to do $250 at 1x, $500 at 2x, $750 at 3x, and $1,000 at 4x, and buying leaps at the 4x. So even though we're just at a 1x DCA, the fundamentals in the valuation tell me to keep buying this company. Wow, we spent a lot of time on Zeta. Go figure. Stock number 2 is going to be Palantir, the company that they just partnered with. Now, the reason I'm buying Palantir here, guys, is because I think they are undervalued here at $133.76. I've been buying them since closer to $100 since they had this dip, and they've had a nice bounce back. So they hit a low about $107, and they've had a nice bounce back up to $133 over the last 7 days. They're up 4%. Last 6 months, year to date, they're still down 20% from their highs, guys. So still way off their highs. And the reason I'm buying this company is very simple. They partner with Zeta. They're going to get more enterprise clients due to their partnership with Zeta. Zeta benefits, Palantir benefits, and just overall what Palantir is doing, they're reshaping the landscape of the software industry completely. And now this partnership with Zeta does that even more. Guys. So when I look at Palantir in their ontology layer and AIP and what Alex Karp and company is doing at their company, guys, I don't know how to, I want to put this in the simplest way. I believe what Palantir and Zeta are doing now together, they're going to completely almost monopolize the software sector, because the amount of return on investment that Palantir provides its clients, the amount of return on investment that Zeta gives its clients back is next level. So with Palantir moving where they're going, continuing to grow how they are, I just keep thinking about the CNBC interview with Alex Karp and how he was saying that everybody's not happy with how much they're having to pay in tokenization, all this other crap. It's just funny because like companies really like Palantir because they have to spend. They spend X and they get tenfold back. And that's business. That's amazing business at its core, guys, where you can provide for your customers and clients way more than they pay you. And that's been Palantir's whole thing this entire time, ever since they were at $5, now seeing them at $133. Even at all-time highs up at $181. That's been their entire playbook. Their entire playbook. Be good to their clients, be good to their customers, give them a product that helps them make more money as a business, and take 1/10 of that as a cut. That's their business. That's why I love this business so much. That's why I'm buying Palantir again. I used to be a big buyer in the 20s. I sold way too early because, yes, the valuation got stretched, but I failed to see what they were truly going for. I mean, they were already building it. I just thought I didn't see what I see now in it. What I see now in it is that this company that's a $307 billion market cap company, I don't see how they don't grow into a $1 trillion plus market cap company, which means there's a lot more upside from here. And they're going to cannibalize the software sector. Everybody thinks AI is going to cannibalize it. You better watch out for Palantir. I think they're going to cannibalize it with Zeta's help. So this company, analysts have a $187 fair value, $215 on the high end, giving you about a 40% upside, 29% margin of safety. Revenue growth is pretty good here, 56%. Pretty good. They just did like 85% last quarter. They might come in this next quarter and just do 100% revenue growth. Absolute insanity, guys. Free cash flow, $2.7 billion. 2-year forward PE is 64, but I don't base this company based off price to earnings. I base this company off PEG ratio, rule of 40, and discounted cash flow models. That's how I valued this company. So if we see down here, revenues continuing to climb higher, going from 1.5 all the way to 4.8, 2.1 billion in free cash flow like we talked about, and their gross operating and net incomes are all exploding higher, 82.4% gross margins. Insanity, guys, insanity. So if we jump on over here to some charts, we're going to see, again, just explosions happening on revenue, net income, EPS, free cash flow, gross margins, operating it's all up and to the right. So there's nothing wrong with the financials. There's nothing wrong with the fundamentals. The company just keeps growing like a weed. And then if you look at it just based off a PE, is it expensive? Maybe. But if you actually look at it on a DCF model, which they're growing more than 51% on their free cash flow margins. So we'll just exit that one out. But on EPS, if we look at this, growing EPS rate about 25%. If we kick this down to 50, but bump this up to about 45%, where analysts actually have them growing. Analysts have them growing their EPS for 103, 43, 47, 100, and 119. So yeah, you can clearly see that over here on the EPS, 45% is actually where it should be in a target PE. They're going 45%. I mean, target PE 50 is pretty solid. I would keep that. But yeah, so it gives you about a 200. So that aligns kind of where analysts are. And again, rule of 40, 69, PEG ratio, that's not accurate right now. PEG ratio, especially they're going to be growing 100% this year. Their PEs come down a decent bit in the 90s forward, right? So you're looking about a solid PEG ratio too. But when you just look at the absolute amount of growth that this company is having, the rule of 40 EPS model, and then even the DCF model, when you throw in the actual growth rate of this company, it looks very good. It looks very good in my eyes. And even if we were at fair value today, I would still be buying Palantir. I do believe fair value today is probably around $200 to $220. So I have no problem at all buying at $133.76 because I'm getting it at a valuation, at a great valuation, but I'm also getting a great company that's a growth beast. So where am I buying Palantir? Well, again, I'm buying it right here. The DCA optimizer is only at a 1x, but it's funny because it was just at a 4x when it was down here at 106, 107. I started buying 2028 leaps when we hit this 4x DCA, dollar cost average, when we were down here in June I started buying some leaps and I started 4xing my DCA times per month. And now it's funny because after just a month, if you would have missed that, now you're right back to just single DCAing into this company. So I am back to just 1x on my DCA. I bought a decent bit here of leaps down here just because I kind of knew we were in this nice support area around 100, the psychological level. So I'm still buying this stock. We're, again, undervalued, way off the highs, and I just really like the company. And to me, I'm just looking at it, and if I can only own 2 software companies in the entire software industry, this entire software stack, it's gonna be Palantir and Zeta. Palantir is a mature company with good upside still, but not like 15, 10, 20x upside, and Zeta does have that 10x plus upside. Microsoft is obviously still a great company, but if I had only picked 2, I'd pick those 2. Because Palantir, I believe, has more upside than Microsoft, and I believe that it's just a better bet overall. Microsoft's safer, right? But I rather be buying Palantir, and then I just have so much conviction in Zeta. Also, guys, if you want access to our investing community, you can come on over here. We have tons of stocks we cover. We give out all our investment alerts here for the high conviction portfolio, my highest conviction companies that I'm invested in. You get to see me buy those Palantir leaps, buy Zeta, trim out of some of my positions, like trimming 5% of my Oscar position, another high conviction company that's been running crazy this year. See me trim 5% of that every 50% gain. We have education. Show you my high conviction portfolio, like I said. And we're just hanging out, chatting, and trying to become better investors together. Me, obviously, leading the helm. So if you want access to that, all my investment alerts, everything, all my articles, all my analysis, all my price targets on my favorite stocks, you can come on over here. I'll leave the link down below. It's a High Five Collective investing tier. You can join that today if you'd like. So stock number 3, before we get into our bonus stock that's also partnered with Palantir, is going to be, drum roll, SoFi. SoFi. Now I'm going to do this one a little backwards. So SoFi, where am I buying this? I'm buying SoFi right here now. The last time we started getting 2 and 3x DCA, dollar cost averaging, on SoFi was back here in 2024 from a range of $6 to about $8. And if you were buying based on the DCA optimizer and you had faith and you believed in the company that is SoFi, you would have went from $6 to $8 all the way up to $33. You would have had a massive, massive gain. Now, the fib retracement levels showed that the 0.705 and 0.618 have been very hard to get through, as it should be, from this low right here. And we're holding up and consolidating nicely. So we've been buying between $15 and even now at about, right under $20. So a $5 spread, we've been buying this name. We're going to continue to buy this name. If it does want to come down lower, so be it. But I do believe that it's consolidating for the next move higher. Banks have been absolutely crushing it during this new earnings season. So I do believe that SoFi, which is a bank, but it's also an everything app, which is why I love the company so much, because it's not just in one banking lane. It's in this everything app lane. It does brokerages, it does crypto, it does finance. It does loans, student loans, home loans, it does savings, it does everything. It does everything. And they even have tech around it. They have a subscription model. You can trade there, you can invest there. They just have so many great things going for them right now that I believe that, one, they'll either get acquired down the road. Again, they're only a $22.92 billion market cap. They can get acquired down the road for between $50 and $100 billion. Or I believe they can grow into a $50 to $100 billion market cap company as a bank, right? So again, I'm not playing this for the acquisition. I'm playing this for, I believe they're severely undervalued here. I believe what Anthony Noto and team are doing over there is one of the best things that a CEO can do for a company. And he's putting his money where his mouth is, and he keeps buying and has been buying heavily down in this range as well. So I'm buying in here. I'll continue to 2x DCA per month into the high conviction portfolio and my private portfolios as we keep on staying down in these levels. Once we get to a 1x, then I'll just go to 1x. But if we get to a orange, then I start holding. And then obviously I trim 5% every 50% gain. That way I'm taking profits, putting it back into my DCA pool and using that money for fresh buys on SoFi or a new company. So where do analysts see this company as a fair value? Well, if we jump on over to analysts, analysts believe the consensus is $21, currently sub $18, and the high is $29, which is underneath the all-time highs that it hit this year around 32, 33 bucks. Analysts are thinking that we grow revenue 40%, 32%, 22%, 25%, 13% over the next 5 years. In EPS, they think that we're going to have a big year, or we had a big year in 2025. They think we're going to grow 64%, 35%, almost 30% again, and then 34%. Analysts, for the most part, have 9 buys, 14 holds, which those guys are just scared. I don't know what's up. The stock is way down, and you're sitting here saying hold. Okay, no, I'm gonna go ahead and be adding here while you guys are all scared to be buying, because I know where this company is going towards the rest of this year and into 2027. People are just scared about the rate cuts. People are just scared about what's gonna happen there. Are we gonna hike rates? Blah blah blah. Yeah, go ahead. If you want to hike rates, go ahead. Give me a better price to be adding SoFi, because in 2027. I believe that rates will get cut. They will get cut in 2027, I believe. Looking at the charts, the revenue is obviously exploding. Net income is flipping and moving it nicely higher. EPS as well. Free cash flow is not a free cash flow play company as of right now. It's all about revenue, net income, EPS. Gross margins are good. Operating margins, net margins, free cash flow margins are not good. Again, not a free cash flow margin company you're going after. So, based on everything we're talking about here, like I said, I am buying it right now. I do believe it's undervalued. Is it screaming? Is it a screaming undervaluation? No. It was down here at 15, but now we're $3 higher. So it's not screaming, but it's still a good value. And I just like where the company's going here forward. And I like the leadership in Anthony Noto and that he's sitting there and buying while everybody else is fearful. So that's SoFi. Bonus stock time. We're talking about a space company, Voyager Technologies. Now, guys, the amount of politicians that are invested in this company. Now, hold on. This company is high risk, high reward, okay? This is not a super crazy. This company is high risk, high reward, guys. It's a $1.58 billion market cap. Let me just put it like that. Sub $2 billion market cap companies, just throw them in a high risk, high reward bucket, okay? You should not be throwing a lot of capital at them. I'm not throwing a lot of capital at them. I don't put more than about 5% of my portfolio at any given time in speculative plays. I don't see a Zeta as a speculative play. I see that as a very strong play, and I believe they have a moat. Voyager, there's speculation there. So with Voyager, again, they have many politicians investing in the company. They are going after they're not going after. They have this huge contract for an agentic AI platform centered around space with potentially Palantir. Guys, potentially Palantir and Voyager might be partnering up, and that would obviously be huge. So they have that. They're also partnered with Anduril. They are in on the US Iron Dome project. And the biggest thing is they're in I think it's about 60 or 65% ownership of Starlab. And Starlab is going to be the next space station that they are going to have 60 to 65% ownership of. And the space station is supposedly going to net $30 billion. So the amount, that's 65%, 60, 65% ownership that they have, and the big boys that are on top and with that, like SpaceX, for that new Starlab, it's just insane. And it's supposed to launch by 2030. So again, there's going to be some time period of free cash flow burn. There's going to be a time period that this is going to be more a story than it is really the fundamentals and financials showing you this is crazy undervalued, blah, 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 blah. But just looking at all those factors with Star Lab, looking how multiple politicians are getting in this name, the links that they have to Anduril, potentially Palantir, NASA, the links that they have to the CIA, the links that they have to the Trump administration, so on and so forth, guys. This just feels like one of those companies that, yeah, I'm happy and very eager to continue to build out my position in this high risk, high reward name, because I do believe the high reward will be coming for me for investing in this name. I really like it. I really like where they're going. I really like how they're positioning, and you're getting them at a massive discount. And again, just literally a few months ago, they were at $51. They were basically double the stock price just a few months ago, up 86% for the year. And now they're down, about 4% for the year. But over the last 6 months and 1 month, they've been just getting crushed. And analysts agree with what I'm saying. They believe fair value is about $54. High end is about $62. So giving you about 102% upside from today. That's what analysts believe. And analysts are pretty conservative most of the time. So if we look at the charts, it's not going to be pretty, right? They're doing only about 166 million in revenue, but again, they're $1.58 billion market cap. They're losing on net income, losing on EPS, losing on free cash flow. Again, like I said, they're cash burn. Their margins are not going to be there. This is a company that you're betting on that 60 to 65% of Star Lab revenue that they own, right? Also, this company, I think it's about 80%, 90%. They own about 80 to 90% of the black powder market. And it's funny because this black powder market is black powder is what is used for a lot of these projectile missiles. And it's going to be very heavily used with this Iron Dome that we were building here in the United States, potentially. So having a grasp on black powder, where as time goes on, we're only going to need more missiles. We're building this Iron Dome defense. Yeah, that's just another bullish case for this company that's also really nice, because that black powder and sale of black powder and being able to have price dictation over that, it's going to allow them to continue to supply themselves with capital going forward. That way they can make sure that they have enough money to make it to the Star Lab launch. And once again, Star Lab launches, it's going to be very big for this company. I think it'll go without a hiccup. And yeah, like I said, high risk, high reward. You guys do what you want. There's not financial advice. Just want to put this on your guys' radar as you guys watch me. And this is a company that I do hold stock in, and I look to be a player in this stock and all the way until Star Lab launches and see what happens from there, right? I'm very excited to hold this company and see where leadership takes it. So, where am I buying? Well, I'm buying right here and now. Our low is down here at $17. We IPO down up here at about $74. We hit a high up here about $52, and we're sitting down here in this buy zone, as I call it, between $17 and $26. I'll continue to buy down here. We're probably very close to bumping into a 2, 3, or 4x DCA down here. So I will start amping up my buys down here. And yeah, I believe with the story, I don't believe that we really fall under $17. But again, anything can happen, obviously. But I think we will stay in this range, chop around, come down here. And when space starts getting love again, I mean, this thing could reverse and see a huge upside move very quickly. I mean, it literally did, what is that, 88% in 1 month back in, back in May of this year. So the thing with these speculative companies, these speculative stocks, especially space stocks, SpaceX IPO, ASTS, you've seen that run, Rocket Lab, you've seen that run. These stocks can move very, very fast. So yeah, this is my space bet. Voyager is my space bet. I really like the company. I'm going to continue to add here, have some articles here and some posts on why I like it even more. Again, inside the Investing Collective, you want access to that. Link in the bio below. And besides that, guys, that's really it. I hope you enjoyed the video. I hope you got value out of it. Let me know if you're buying any of these companies in the comments below, or if you're looking into any of these companies, let me know down below. And besides that, guys, I will catch you guys in the next one. Have a great day.